Good morning, everyone. Thank you for joining us this morning. We are excited to host this webinar on nonprofits and how the stimulus package has affected all the nonprofits in both our organizations and as well as MSAE, the Michigan Nonprofit Association. We're super excited to collaborate with MSAE on this and make sure that we get the word out. There has been a lot of confusion about what the stimulus package, the CARES Act, actually provided for nonprofits. So we're excited to be able to be with you today. We have probably 20 minutes of presentation to just kind of lay the groundwork, and then we will definitely go through a lot of questions. First off, my name is Sarah Jennings. I'm sorry I didn't introduce myself first. Also joining us today is Brandy Terwilliger, a shareholder in our tax department, as well as Donna Oser, the president and CEO of MSAE. So welcome to both of you.
Morning.
First, I'm going to let both of them do a quick introduction of themselves, actually, and then we can get into the slides that we have prepared, like I said, for the baseline. So, Donna?
Good morning. Thank you, Sarah. I appreciate the opportunity to partner with Maynard Costerisan on this. So our goal is going to be to answer as many of your questions today as we possibly can. Some of you sent them in ahead of time, so we'll make sure that we get to those. And anybody who sent in a question that we don't have the answer to today, we'll be sure to follow up with you. So thank you and good morning.
Hi, this is Brandy Terwilliger with Maynard Costerisan. I've probably worked with most of you. I'm a tax partner, and I will be kind of sliding in and helping out with some of the tax implications when we do the presentation. And
Perfect. Thank you both. And my name is Sarah Jennings, as I said at the beginning, and we are excited to have you here. So first off, thank you to Brandy for kind of steering the presentation and getting us rolling. We already told her I'm going to just say next slide as we go through things. So next slide, please. There we go.
There we go.
So first, we just wanted to kind of take a step back and go through big picture, what is the CARES Act? So we've talked a lot about what stimulus the legislation has come through and what that really looks like. The CARES Act is the Coronavirus Aid, Relief, and Economic Security Act. And it was really broken apart into two different pieces. The first section is keeping American workers paid and employed. That's where we'll talk about the Paycheck Protection Program and a couple other things, but the biggest piece that's been in the news is that Paycheck Protection Program, and we'll go into who has availability to do that. And then the second piece was assistance for American workers, families, and businesses. So that's where we get into, and we won't cover much of the individual side today, the rebates that people are supposed to be getting actually starting this week, and some business things. Brandy will go over some of the tax sides of that as well. Next slide, please. So what's available? A 501c3 organization and a 501c6 are very similar into the availability, except for the thing that's been in the news and had the most exposure, that Paycheck Protection Program. A 501c6 does not have access to that funding. And again, it is a loan program. The biggest thing, and we'll go over this relatively briefly in the next few slides, but the Paycheck Protection Program has gotten so much notoriety because most of it, the goal is for that to be forgiven. So again, there are still some great incentives out there for 501c6 trade organizations, such as the Emergency Industry Disaster Loan Program, the EIDL. Again, that is a loan program that's been in existence for quite a long time. Now there's a grant that you can get that advanced and funded so that you don't have to repay that back. We will talk about some things that's come up in actually recent days related to that. The employer payroll tax deferral will go into. Everybody has access to that program, as well as the employee retention credit. Pardon me. Next slide. So the Paycheck Protection Program, again, Maynard Costerisan has done a lot of webinars on this. So if you have questions, we certainly will go through all of the specifics, but please type in your questions if you want to go through any of the line items in detail. So what it is loans to companies to keep their workforce employed. So when we've been talking to our clients, we really say, remember the big picture of this program. It's intended to make sure that people don't have to be laid off. If you don't have enough work for people, that doesn't mean that you lay them off. This program says you might keep them on board so that you don't have to deal with the turnover and the transition of a new workforce. So who is eligible? Employers with 500 or fewer employees, self-employed individuals, 501c3 organizations. You had to be in business as of February 15th. There are some additional eligibility accommodations for accommodations in food, the food sector. Next slide, please. So what we did here is just a decision tree to see if you are eligible, what questions you should ask yourself. So the first one, as I said, it goes through all of the things on the next slide. This sort of a decision tree can also be found in the Paycheck Protection Program Michigan.com. So that's a website that the state, the MICPA, the Michigan Bankers Association, credit unions, as well as SBAM all work together to make sure that the state of Michigan is educating all of the small businesses and organizations around what they can do. So this decision tree just kind of walks through the questions you ask yourself, whether or not you're eligible. And again, on the right-hand side of this slide, are you a nonprofit organization? Yes. If you're a 501c3, you go straight to the calc. If you are not, you can't go to this calc. But one of the things that we'll talk about, next slide please, one of the things that we'll talk about is if you have a for-profit subsidiary or a 501c3 affiliated with your trade association, you still have some wiggle room there. So what it does is it looks at compensation to employees, and compensation includes any commissions, bonuses, compensation, wages paid between April 2019 and March of 2020. The goal within the legislation is using the year before, 12 months prior to the loan being applied for. There are some banks out there that are accepting the calculation on a calendar year just because it's easier for people to get that information. And then payments to independent contractors. Now we do know that after the legislation was enacted, probably a week later, they came out with independent contractors actually needed to submit a completely separate form. It's the same application, they just were completing that individually instead of within the organization. So you don't include independent contractors within your 501c3 or a for-profit organization. You don't include those 1099 people when you're looking at your application. What it doesn't include is compensation of any employee in excess of $100,000. It doesn't include compensation if you have non-US residents, and it doesn't include compensation if you are paying PTO for people who you're already getting credit for that under the Families First Coronavirus Response Act. You don't get double credit for that. Next slide, we'll look at the calculation a bit more. So again,
Sarah,
I'm not gonna, yes ma'am.
I just want to jump in since there are so many different types of groups on our webinar today, and you're going pretty fast. So if we just take a step back on that PPP slide and just reiterate what you had to say about affiliation, in case they tuned themselves out thinking they were, other than a C3 and not eligible, just restate that affiliation statement so they can rethink that.
Right, absolutely. Thank you so much, Donna. So what we were saying, so you need to think about, and we do have some verbiage to this effect later in the slides, but if you have a 501c6 trade association, but you have a for-profit subsidiary or a 501c3 nonprofit, the for-profit subsidiary and the 501c3 can still apply for this Paycheck Protection Program. There is a little bit of ambiguity about what you apply for, right? So if you're a 501c6 or C3 or for-profit subsidiary and you are the paymaster for all of the entities, there is some guidance out there that actually says you can submit the whole entire payroll amount as your loan application. And then it's up to the lender to decide if they're going to fund that whole amount. The flip side of that is if you, or not the flip side really, but another way to look at it and how we're actually recommending people, if you're a 501c3 or a for-profit subsidiary and you're the paymaster, you can at least get a loan or submit the application for a loan for your pieces of the payroll. So I think, and when we get into the forgiveness discussion, we'll talk about this a little bit more, but I think the challenge, if you were to submit the whole, and this is a gut or a personal thing, it's not anything that's we've gotten clear guidance on, but where the challenge will come is when you are trying to look for forgiveness on the loan. that's where it's going to come back whether or not you should have requested the full amount or not for the full payroll. The flip side of that is if you are a 501c6 organization and you are the paymaster, but the 501c3 or the for-profit subsidiary pay for a piece of that piece of that payroll in the form of a management fee or something, if you can verify and prove those employees that the for-profit or the C3 are paying for, that can be submitted in an application. You just have to be able to identify that out. Now, I'm not saying that it will be a streamlined, straightforward process, because I am 100% certain there are some lending institutions out there that don't know that you can do that. And we've actually talked to BDO, who is our global affiliate, and they have said the same thing. They've had to go back and represent some of their clients to make sure that this is clear, because, I mean, we all have to be patient and understand all the lenders are going through all of this at the same time, and there are just so many moving parts. We need to work together to make sure that it's clear.
Okay, Sarah, one more thing before you move on, and that is just restate and do a little bit of detail on this $100,000 ceiling per employee. So it does not mean that if an employee makes greater than $100,000 a year, they can't be calculated in. It means something very different, right? You want to speak to that?
Absolutely. Yep. So if an employee makes $150,000, then only $100,000 counts. $100,000, pardon me, counts toward this Paycheck Protection Program, and you kind of throw out the other $50,000. You still count the $100,000 in here. The other thing to make sure that you're aware of is that is only the gross compensation. That doesn't include the health care and the group health care dental that's on the screen right now. Even for that $150,000 person, you can still include their health benefits, and up to that first $100,000, you just can't include that excess $50,000. That makes sense. And that's actually going to be applicable even for independent contractors as well. When they're submitting their separate applications, they can't go over that $100,000 threshold either, but they can go up to $100,000. Yep.
Thank you.
You're very welcome. Yep. So in this calculation, you see that payroll, that upper line up there, that payroll, salaries and wages. So in this example, that includes a person that is paid gross payroll $150,000. That's why down here under reductions, there's that $50,000 there, because we have to take that $50,000 back out because that one individual was paid $150,000. So again, what is included in the calculation, what they look at is the average, the last 12 months average salary. So it includes your group healthcare, dental, vision, workers' comp. It includes, and often workers' comp is part of that state and local taxes. It does not include the employer portions of the federal taxes. That's not anywhere in this calculation because, again, it's the gross wages that's up there at the top. And how you do that is you take the totals for your last 12 months, you get your average monthly total, which is that $101,000 right down there, and you multiply that by 2.5. So it's 250% of your average monthly totals. Next slide, please. So again, this slide is just looking at what you're allowed to use these funds for. You can use them for payroll cost, group health insurance, interest on mortgage or other debt incurred prior to the covered period, utilities, and rent. Next slide. There are some things to think about when you're looking at loan forgiveness. And before we even start with this whole conversation, we need to make sure that we say there is a lot of questions still out there about how they're going to, in the end, calculate this loan forgiveness. Again, it is amounts forgiven are canceled indebtedness by the lender, so there's no taxability on this. If you're anybody, for-profits aren't going to get taxed on the income because this is kind of income. We've gotten quite a lot of questions on how that's going to look on your financial statements, and it might be for a for-profit organization, there's probably going to be some other income, not up in your operations, but some other income, and that's just going to be kind of a book tax difference because that's not going to be taxed at the corporate level. It's based on fund usage within 8 weeks of the date of funding, so that's when it's approved and the funds hit your bank account. what you're using in 8 weeks. You need to make sure you're maintaining your workforce. And the way that they right now are looking at that is they want 75% of those proceeds to be used for payroll costs. You can also use it, as I said, on rent, utilities, interest on covered mortgages. Next slide, please. So I won't go into detail. This is a tentative calculation of the loan forgiveness. And the reason, again, I'm happy to answer questions, but all of the questions are going to be prefaced with our understanding as of today's date is, and then this is how you calculate it. But what this is saying, okay, on average, how can we calculate our debt forgiveness? We look at what our actual costs are. So if we say we actually paid $200,000, these are our benefits. Here's some taxes assessed and all of those things, our mortgage, rent, utilities. So we actually spent about $209,000 before we take out any of the reduction. Next slide, please. Then what we have to do, they're also looking, and some of this again is, are they going to do it in addition to the 75%, or is this going to be a separate calculation? That we're not 100% sure on, but within the act, it specifically states that they want to look at your FTE calculations to make sure that your employee count isn't going down dramatically, but you're still spending all the payroll, if that makes sense. So they want to make sure that you're maintaining your head count, your FTE count. The FTE count isn't a straight calculation. It is based on similar aspects of the ACA. So you're looking at the 30-hour work week and things like that. But again, I'm not going to go into this too much because we need to get some more clarity from SBA, from the Treasury, before we really go into these calculations. Next slide. So again, one thing that we've been talking with our clients about are, if your loan is not forgiven, that's not all bad. If you don't use it for all 75% payroll or whatever the end forgiveness calculation is, you still made a great business decision, because you now have a 2-year loan at 1% and you have deferred principal and interest payments for 6 months. So from a cash flow perspective, so again, going back to the for-profit subsidiary, even if you don't get that all forgiven because they decide that they didn't want you to include the 501c6 piece, you still have a very low interest loan over 2 years, which is still a great thing in these difficult cash flow times. A couple other things to think about, next slide please, are what the bank would need if you're going to submit this application. So again, the way you do this is you go online to your financial institution for all of these, who we recommend you go to whatever lender you currently have a relationship with. They are all swamped with applications. If you have questions about any of that, we certainly can go through this. This right here is a list of things that we've compiled and we've seen lenders asking for, but it varies depending on the financial institution. Next slide, please. So the next thing to talk about, and I know, Donna, you had a
Sarah,
question.
Let me just jump in real quick. So as folks are kind of thinking about whether to apply for that PPP or not, one of the things that you and I have discussed with regards to this is there's a lot of goodwill right now. And so if because of the affiliation piece of it, or you're better off probably to go ahead, if in doubt, to apply than not to apply. If you think you can make the case, in other words, other than the time that it takes you to do it, and you may want to consider hiring some expertise, that's another thing that you should think about. Other than that investment, it's nothing punitive is going to happen to an organization that applies that then the government says is ineligible or is misunderstanding that clause or something. Is that correct?
Absolutely correct. Yep. And most of the payroll companies now have packages, so you can print the CARES Act package. So the time to put something together to give to your lending agency or whatever financial institution you have isn't as much as you would think, because the big payroll companies are putting those packages together. We have heard some people saying, well, if I apply for this, does that mean that I'm saying my nonprofit isn't stable? Do I really want donors to see that or members to see that? The answer is no. I mean, again, if you go back to most of especially a 501c6 organization that has a for-profit subsidiary, they're larger, they've got some probably for-profit members, right? So they are business people that understand even if it is a 1% loan, that's a good business decision. Now, the other question that we've had or consideration that people have had is, should I apply because I've heard there's not enough money out there in general, there's not enough money out there to help all the small businesses. So if I am relatively stable, maybe I should just stay back and not apply at all. And we also would say there's a decent chance there's going to be kind of a next phase of funding. So don't stay back if it's going to hurt your organization. The other thing we've heard people say, well, I have to certify that my business was negatively impacted, but I've got this reserves, or all I had to do was cancel an annual meeting or something like that, but we're still going to survive. You're still negatively impacted, is what I would say. Every organization right now is going to be negatively impacted from what's going on, and we don't even know when it's going to end.
So just to kind of build on that, you and I talked a lot about that because we've both gotten a lot of calls from people kind of wondering as to whether or not they should apply for this or something else. And so I actually did a blog post on it Friday, because when you think about the role of a chief staff exec, right, your first responsibility is sustainability of the organization. And so that's a responsibility that has to be taken seriously. And so it's not about whether or not you have reserves. It's about the extent to which it's impacted your organization or association. And in this case, you can't even accurately predict. We don't know how long this is going to last. This could have implications for not just events, but membership, donations, contributions. It could have an impact over years, not just in the short term. So I actually kind of make the case that it's actually the responsible thing to do, unless you're sitting ridiculously pretty, is probably to apply.
Yeah, I absolutely agree. You're right. We don't know the impacts of how long we're going to be under this stay home, but are our members going to renew? We're not sure. And even after all this is lifted, are people, I am a firm believer that we're not going to get back to our old normal. It's going to be a new normal that none of us know what it's going to look like yet,
So we have a couple questions that have popped up that are payroll specific. So let's pause now and answer those before we move on to the EIDL grants. So here's a question from Heather. If you don't use the 75% on payroll, does the entire loan amount received need to be repaid, or just the amount that wasn't spent on payroll?
So that's part of the forgiveness, that we're not clear how they're going to do that calculation. In the initial legislation, it looked like that would be part of the consideration. So it just meant that you wouldn't get 100% of the loan forgiven. And I think that's where it's going to go. They want to make sure that you are intending to keep your people paid or keep your workforce going. So if your initial application was predominantly payroll, obviously, because that's what they all are going to be, right? So that's how you're saying that you're requesting the loan. If you're using it for dramatically different reasons, that's where it's not going to be forgiven. What I can't say is, if it's a straight one-to-one thing. So if it's 70, if you only use 60%, does that mean you're only going to get 60% forgiven? That piece, they just haven't come out with the final clarifications yet. And we're hopeful that Dana, I think you're still muted. We're hopeful we're going to get additional clarification of that within the next week or so.
That spacebar unmute thing doesn't work when you're looking at another file. So we have another question here. This one is from Andrea at St. Vincent de Paul, and she's asking, we have per diem grants that don't cover all program expenses. Can we use the PPP to pay these salaries?
Yes, yep. And we've actually talked about that internal as well. So you can use the PPP to pay for those salaries. You can use those salaries in your PPP calculation. The big question is on the forgiveness side again. So if you are getting salaries paid for by a grant, and it's a reimbursement-based grant, if your programs are suffering because of COVID-19 and because of things changing so that you're not going to be reimbursed, even if you thought that they were going to be funded by these other grant options, they might not be. Obviously they're all different because it depends on what time studies and things that you're doing, but just keep that in the back of your mind. Just because your budget says that it's going to be funded by a grant, don't not include those people in case you're not able to keep those people actually working on the program, and that's part of the requirement. But yes, absolutely. Specifically for those that aren't covered by another grant fund, yes, you absolutely can apply with those.
So Sarah, we had a couple questions come through that actually weren't nonprofit related. They're actually from a sole proprietor. And so I'm going to just point out at this point that you can follow up with that individual electronically after this. Does that sound good?
Yep, that's perfect.
Okay.
Yep, we also have another Q&A session tomorrow that's strictly question and answers, but we certainly will follow up directly. Mm-hmm.
Okay, and a couple of housekeeping issues just to point out as people are juggling lots of things at the same time. So are the slides going to be made available after this session?
Yes, ma'am.
And will the recording be made available as well, just so people know?
Yes, absolutely.
Okay, perfect. All right, why don't we go ahead and move forward into the EIDL grant conversation. And as you're talking through this, Sarah, point out that they can't apply for everything, right? Eligibility using one thing may disqualify you for something else, right? So let's just make sure they understand that.
Yep, absolutely. This one in particular, if you had applied, so I would like to point out, so in the last week or so, we've been getting a lot of feedback on these emergency EIDL grants. So there's the loans, and then what happened in the CARES Act is they said up to $10,000, we'll do loan advance directly through the SBA, and that can be forgiven, right? It's a grant instead of a straight loan. So that had $10 billion in funding. You had to say that you had a direct, or you were applying within this COVID-19. I was on a call with SBA late last week, and they did say that their website was updated. The loan application was updated specifically for this within the last few weeks after the CARES Act was processed, or was publicized, or passed, rather, the legislation was passed. And when that update happened, if you applied before their system was ready to have you apply for these advance funds, it may not have triggered in the right spot. So I would, if you haven't heard back from the SBA, we've heard many people got confirmations that they submitted the request, but they didn't hear anything. You can reach out to the SBA. If you have a confirmation number, definitely reach out with your confirmation number, but don't just keep reapplying, because that just clogs the system even more. I don't want to speak for SBA, but what we've been hearing is it's out of money. And at this point, there are certain factions that are trying to get some more money funded into the system. But right now, it's pretty much shut down. People that thought, aside from this advance grant up to $10,000, people that thought that they could get a loan up to $2 million are hearing that they're going to get $25,000. So it's just a completely different landscape than it was 3 weeks ago. What this slide says, not that it wasn't in effect, it was, but it was an emergency grant. A lot of people read and heard it was going to be $10,000. It was actually up to $10,000 is the way the act states, and the legislation was. And what they started to do, it was $1,000 per employee up to $10,000. They also had said that you would get this advanced funding within 3 business days, and that wasn't necessarily the case with most, actually, which again, I think we can appreciate if we look at the volume of people that were submitting applications in that short time frame. It was just difficult for any system to keep up with. So I would say, so you can get an EIDL grant and participate in the Paycheck Protection Program. When I say don't double dip, if you use it for payroll, it's going to be included when you're looking at your loan, right? Because you've already requested that payroll and used it for the Paycheck Protection Program. So you're not going to be forgiven on the same thing twice, is really what it's saying. Oftentimes, in some of the other programs that we talk about as well, when we say don't double dip, similar, when I was looking at the calculation a few slides earlier, you can't get reprieve under the Families First Act for PTO for people who are staying home because of directly related to COVID-19 testing or illnesses or childcare, and also request to be reimbursed for that same PTO under the Paycheck Protection Program. This is very similar thing. Next slide, please. So a couple other things that you can look into as a 501c3 or a 501c6 is employer payroll tax deferral. So this applies to the employer portion, not the employee portion. You still need to make those payroll tax payments. But what this is 50% won't be due until December 31st of 21, and the other isn't due until the next year. Now, I will say that if you do this, you can defer up, and you also apply for the Paycheck Protection Program. You can do that, but once your loan is approved and funded, you have to stop. You can still defer the amount that's been incurred up until that point, but once you hit that, then you have to stop. Next slide, please. The employee retention credit is another thing that would kind of be after the fact, but it's a good program nonetheless. It just gets a little bit less publicity, but this is another thing that 501c6 organizations also have access to. So refundable payroll tax credit equal to 50% of the qualified wages during a calendar year applies to the first 10,000 compensation per employee. This is, again, to the employer share of Social Security payroll tax obligations. The excess credit is refundable. So that's a good thing to remember. It's not just that it's going to sit in an abyss, but you might get that refund credit back. Next slide, please. So the way this is calculated is looking at salaries and qualified health plan. If you've got over 100 FTEs in 2019, it's the wages paid to the employees that are not providing services during the COVID-19 time frame. Then if you're under 100 FTEs, then it's all of the wages. So again, if you're over, it's just those employees that are impacted by COVID-19 shutdowns and things. If you're under, it's all of your wages. And again, this is where we continue to say, don't double dip. This isn't the same people or the same payroll that are impacted by Families First Act. So if you had people in the Families First Act, that's not really what we're going into today, but just to specify and clarify, those individuals are one that were directly off because they were infected with COVID, they were self-quarantined at a doctor's because of a doctor's note, or they had to take care of someone who was. A lot of people that were impacted by this were because they didn't have childcare because the schools were closed. So that would be another example. But it includes wages paid, after March 12th of this year, but before January of next year. Next slide. There we go. So this is all companies, even those over 500 employees, which I don't know is, we have too many nonprofit clients with over that, but you had to be doing business during 2020 and you had to see a decline in business because of COVID-19. And I think this does go back to, but required by a government shutdown or suspended operations. So at this point, that's almost everyone, right? Or you experience significant declines in your gross receipts. So I think this, I don't want to say it's a gray area, but I do want to go back to what Donna said earlier. And we were talking about even with whether or not you should apply for the Paycheck Protection Program, everyone at this point has been required to suspend most of operations except for those essential services. So I would think most of the people on this call would apply for this or could apply for this. Next slide. Now I will turn it over to Brandy to talk about some other things that were included in the CARES Act.
Good morning.
So Brandy, before you start,
Mhm.
just before we add content to this, we've had a couple more of the PPP questions come in. So let's tackle those before we shift gears and start talking about charitable contributions.
Perfect.
So one of the questions that came from Dave Martell at Michigan School Business Officials is, will the payroll costs for the forgiven calculation for the 8 weeks after the loan is closed be on a cash basis or accrual basis? He's sort of assuming it's cash, but what do you think?
Yep, I completely agree. I think it's all going to be cash basis. That's how most of the calculations we've seen are coming out, that they should be cash basis. Yep.
Oh, great. Thank you. Another question then is, can unemployment payments be included in the PPP?
Can unemployment, so if they are payments because of the coronavirus, the answer is probably no, like if they are related to that Families First Act. So again, you just have to make sure when you're looking at why people are off, you are I don't want to say creating a separate schedule Excel spreadsheet because I'm kind of a streamlined person and I hate that, but in this day and age, many people are having to keep that separate schedule so you know why people are off. So if they are off, and it applies because of the Families First Act, so they are off because they are being treated for COVID-19, because they're self-quarantined, because they're taking care of some child care, something like that, then no, you can't include those. If not, you can.
Okay, so that question was from Sharon. Sharon, if we didn't quite get what you needed, let us know. Put another question and we'll keep an eye out for it. This question is coming from State News and MSU. It looks like I can't see the full name there, but so do you need to apply for the PPP at the bank you have your payroll account at? I've heard a lot about this.
Yep. So you don't have to at all. You can apply at any bank. What we are recommending is you start with the bank that you already have a relationship with. I will not speak for financial institutions, but we've certainly been hearing many of them won't even, they prioritize their existing clients before they will take on anybody new. Some won't. I mean, we certainly have kind of a laundry list at the office if you have any troubles, but some are accepting applications from anybody. But you do go directly to the bank. You don't go to the SBA website. The other thing to consider, and again, these are all uncertain times, even for the lenders, is as of last Thursday or Friday, at least 3 that we had been working with regularly had suspended accepting applications because they were trying to get caught up on everything that they had received to date. That doesn't mean that they're done. It just means that they're on hold. So just keep that in the back of your head too. But no, there's not a requirement that you have the application with the same bank your payroll account's at.
So I think your slides have covered some of the other questions that came in ahead of time, but just to draw a couple of them out. So this question is about EIDL. Is it true that if you apply for the EIDL, you automatically get the $10,000 grant? I know you spoke to it, but maybe just restate that.
Nope, that is not true, unfortunately. I think that's what a lot of people thought was going to happen, but that is not how it's turned out.
Well, their website even intimated that at the beginning. Yep. I know they've changed some of the text on there, but I can see why people thought that. Okay, so let's go ahead and move on to Brandy's section, and then we'll circle back for more questions once we get through. Thank you for your patience, Brandy.
Perfect. Yeah, no problem. So I'm going to talk a little bit about some of the tax implications in regards to the not-for-profit area. And one of them is some of the changes to the charitable contribution arena. So as an individual, they're now going to allow a deduction up to $300 above the line for those taxpayers that don't itemize, which is actually after the last Tax Cut and Jobs Act, that changed for a lot of individuals that are not able to itemize anymore because you can't get over that standard deduction amount. So this is going to be helpful for those individuals that don't itemize and can still be able to give to a charity and get that deduction. There's also an increase in the deduction limits. So currently it is, or was, you could take a charitable contribution deduction for up to 60% of your AGI. And now for individuals, that is up to 100% of your AGI, depending on what you give for your charity. And a lot of individuals have contribution carryovers from previous years. And so that will be nice to be able to use those. For corporations, that increase in the deduction limit is now 10%, or was 10% and is now 25% of taxable income. So that's a nice increase for the corporations. A couple other things, and this is going to affect mainly the, I'm going to go back. One thing I wanted to mention here that's a little counterintuitive to this on another piece of the act is that there's many individuals out there that give their required minimum distribution directly to charities. And unfortunately, they also have another part of the act that says that if you don't need to take your RMDs this year, so that unfortunately could affect the amount of people who give their RMDs to charity this year. So this part will affect those for-profit subsidiaries that Sarah was mentioning earlier, and also our 990T returns where we're paying income tax on some of those activities. There's a new net operating loss rules. This allows a carryback of losses for 5 years. So for tax years beginning after December 31st, 2017 and before January 1st, 2021, you can carry back those losses up to 5 years. This is very nice, especially if you've had income in the previous years and then in 2020, you're showing a loss because of what's going on in the world. So that'd be nice. And there's some tax planning that could go along with this. So make sure you're talking to your tax advisor on this, because if you are in a situation, I know that earlier in the week or last week, Katie Hamilton did a presentation, brought up a great idea. If you are considering going from accrual to cash and you have a lot of receivables, this could be the year to do it. Create a loss and carry it back if you've had income in previous years. So this is a good tax planning opportunity. There's no limit on the NOL deduction. Previously, you had to only be able to take your NOL deduction up to 80% of taxable income, and now there is no limit. And there's an indefinite carry forward. That did not change. That came through on the last act, and that did not change. Another option is qualified improvement property. So in previously, if you had qualified improvement property, if your for-profit sub owns the building or makes qualified improvement property on the building that you might own or lease, you used to be able to have to capitalize that over 39 years. Now you can capitalize that over 15 years and then take bonus depreciation on that, which is a nice feature to be able to take that depreciation all in the first year. And just in consideration, since it's a month from now, just want to mention the filing deadlines. So those forms that were originally due 4/15. So this is going to mainly be those November 30th year ends, which we only have a few, so I don't know how many are out there. Those have been extended to the 7/15 due date. And those are going to be your 990, 990T, PFs, and your estimated payments are all going to be extended. However, we have not heard anything on our calendar year ends that are due May 15th. So as of now, those are all still due on May 15th. And we are going to treat them as if they are due May 15th unless we hear something different. And that's what I have.
Sorry, now I'm the one that's having trouble with the unmute button. At least we took turns. So the only other thing that we had to cover today, and then we're certainly happy to answer any questions, is just cash flow considerations. So we are working on some additional webinars. We actually have a virtual roundtable where we'll go through some best practices, tips, and tricks. Next Tuesday, we've got some schedules that we're posting to our resources page on our website, and definitely giving to MSA as well, because we want to make sure that even though all of this is going on, it's really, really, really easy to just get so stuck in what the government is doing, what funding package you should look at, what credits you can take, or how you should communicate this, and forget there's a lot of things that we can do just individually within our finance departments to really try to make this it's going to be painful, but try to take a little bit of that pain out, especially because we know that we're not going to our offices anymore, or at least not as frequently, or it's changed. So when we look at this, I did a presentation a couple weeks ago, and we really tried to make sure people understood it's not just the finance department's job or the controller's job to monitor cash flow. It is their job to track it, to communicate it, but it's everybody's job, especially in times of crisis like this, to make sure that we're doing our best and our part to make sure cash flow comes in. So receivables management is the first thing that I would say take a look at. Oftentimes in nonprofits, you look at your pledges and you might follow up with those, whether it's a pledges or it's dues, outstanding dues, or it's sponsors that might have been coming up for those events that you're even holding in July, August. And again, they're not receivables yet, but they are your customers or your clients or your members or your stakeholders. We need to be following up with them sooner, right? It's really easy to not follow up and always fall back on the process, especially from an accountant's perspective. We are so process driven that I know the day of the month, every single month, that my finance team is going to follow up on receivables. In times of crisis, you may need to do that more frequently. You definitely need to be talking to your stakeholders and maybe even brainstorming, okay, if the sponsorship that you were going to give us for our May or even July event is going to be changed a little bit, what might we change it to? Think creatively, think outside the box, and make sure that you're not just stuck on strict plans so that they say, well, I can't do that full amount. I can't do that full amount right now, so I'm not going to do it at all. You might benefit from giving them a payment plan. The same thing goes on the payables management side. Right now, in times of crisis, it's easy to say, I can't pay all my bills and get overwhelmed. From a nonprofit perspective, there's tons of things out there. Don't just sit on it. Don't just not communicate to your vendors, because you want to maintain all of those relationships. So make sure you're taking a good detailed look on a weekly, bi-weekly, monthly basis, depending on what your cash flow is like at this point. And make sure you're talking to your vendors about different options you might have. All of your vendors want to work with you, because right now we're all in the same boat together, right? And then obviously the last one we have on here is cost reductions. Make sure you're not just paying the bills because they're the same bills that you've always had and they're on autopilot, right? Make sure you're looking at not just a 2-month window, but you're looking at a year analysis on where your organization might be. Because right now I just don't think any of us know what that might look like. So I think we have to be, in order to be fiscally responsible, we really need to look at big picture, all of the different options for our organizations. Yes, absolutely.
So one of the things to think about in some of these conversations, I think, is the timing of your conversation. So while you may have receivables due, or like some organizations are either on a schedule to either ask for donations or re-up membership or something like that, is now really the best time to make the ask, or are you better off to see if you can play a longer game in order to keep the goodwill of those folks? I have had some organizations contact me who just followed the regular schedule and got a lot of negative pushback from their folks who normally supported them, feeling like it was inappropriate for them to make an ask at this time. So I think that is certainly something to think about.
Right.
Okay, so
and that's exactly what we're seeing from a lot of our clients in the feedback. And that's our recommendation, is don't do the normal ask. You can still reach out and have conversations, because you want all of your stakeholders and customers and things to know we're all in this together. It's a different conversation because you're saying, hey, we're still here. How are you guys doing? Not, hey, we're hitting you up for your normal golf sponsorship in July. It's just a different conversation. Yep.
Right. And I know it's hard to think like that when, not everybody has reserves, right, where they can play a long game. So I think the important thing is just the conversation, opening up the conversation to see what's possible. So let's circle back to a couple more questions that we had ahead of time or during the flow of the conversation. And I would invite participants to kind of think about what information has already been shared with you and what questions do you still have. There's no question that is foolish. If you don't want your name associated with it, you can always just send it to the panelists and not the attendees. Of course, we respect that. So that's a pull down option in the chat bar. You don't have to send it to all attendees. You could just send it to the panelists. So here's a question that came in. Is the dollar increase for the charitable contributions at 100%, is this a dollar for dollar against your federal tax obligation?
Are we talking about the, so the part that you can deduct up to 100% of your AGI is a dollar for dollar on your itemized deductions.
Okay, thank you. So let's just think, so we did get some clarification on that question earlier from Sharon. She's saying what she was referring to with that question was the payments made to the state. So the SUTA or the FUTA. Did you follow up on that? Okay.
Yep, the state, absolutely. That is included in the Paycheck Protection Program loan maximum calculation. Yep.
Okay, and just wanted to make sure that one of our participants had a question about having applied for the EIDL grant over a week ago, have not received advance funds, but does have a confirmation. So just restating that that's not unusual, right?
That is not unusual. And as of last Thursday, I believe, was the last time I heard directly from the SBA, and they were saying it wasn't close to 3 days, it was closer to 10 days before you were going to hear and see anything.
Okay, so while we're kind of seeing if folks have additional questions, what I think would be most helpful at this point is to walk through some of the resources that you've talked about and just touch on. So what we know, we first started to talk about the Paycheck Protection Program, commonly called PPP. So thinking about what types of nonprofits are eligible for that, those would be C3s and C19s, is that correct?
Correct, yep. Yep.
And so we did get some questions from folks ahead of time asking if with ASAE, the American Society of Association Executives is of course pushing hard to get additional resources for associations. Associations tend to be C6s, C5s, C4s, generally speaking, and so had some questions about, are they specifically asking for more than just C6s to be added? So I want folks to know that asked that question. I directed that question directly to ASAE, and I'm waiting for a response. I'm going to email that out to you once I know. So know that I will definitely give you their direct answer on that. I'd sent it this morning. I was hoping to get a response, but hadn't got one as of the start of this. So now we'll step again forward and look at the economic injury and disaster loans, so those EIDL loans. And so, Sarah, my understanding is anybody's eligible to apply for these. Is that your understanding?
Yep, that's correct.
Okay, so that would be something viable for everybody on the call to look at. And then talk a little bit about just the small business debt relief program and who that would apply to.
The Small Business Debt Relief Program should apply to everyone as well if you have debt with the SBA. So obviously you had to have that first. Yep.
If you had it to begin with, it doesn't
Correct.
necessarily rule you out of seeking an additional, right? Okay.
That's correct. Yep. Yep.
And so just thinking about some of the other pieces that you covered, is any of that limited to C3s, or would that be open to other Cs as well?
Everything is open to all the others. The only one, like I said, is just that Paycheck Protection Program.
Just
And
the
again,
paycheck.
I do want to reiterate, because we have so many people with those affiliations, that to make sure that you're really evaluating whether or not you have a for-profit subsidiary or a 501c3 that does absorb any of those salaries, that you can still apply, even if it is the 501c6 that's the paymaster. So just make sure we're happy to reach out and look at your payroll records and support you in any way that we can. We just want you to know that there is guidance out there related to some PEOs. So they're organizations that maintain all of the employees themselves, but then it might not be a 501c6, but the organizations that's using their services, they don't pay direct payroll. But as long as that organization can show these are the employees the PEO is paying on my behalf, they can request that loan. So what we've seen is SBA and different global accounting firms are saying, okay, that's a correlation. That's the same thing. So just, again, we're happy to help look at some of those records.
So in just thinking through how people digest this and make a decision, I know I've received a lot of emails and a lot of questions, and I know that both of you have, Sarah and Brandy. So one of the things I get that often we're talking about small nonprofits, or we're talking about small staff associations with limited resources. So I just want to encourage folks to pick up the phone and call whoever your contact is. So whoever's generally doing your audit, because that's going to be done by an external source. You certainly could be talking with them about what kind of advice, or if you have additional support in the preparation of your financial statements, maybe that's the same as the folks who do your audit or your 990, maybe not, but those are all good resources. Don't try to think this through on your own. This is a case of that would be, I might put that in the category of being penny wise and pound foolish, right? Mm-hmm. It's probably worth working with a professional to think through what makes sense. What would you say to that, Sarah?
Absolutely. Absolutely. And speaking for myself, but I know I'm pretty confident that other CPA firms are the same exact way. We're happy to brainstorm. We have, Maynard has more Q&As, one tomorrow at 2 and then one Thursday at, or 2:30 tomorrow, and I believe Thursdays at 9:30. If other questions come up, they're just open forums, not our clients, not anything. It's really just a time, because we know there's so many people out there that may or may not feel comfortable calling that trusted advisor or don't know how to reach them. So we're trying to have open conversations to help spark some brainstorming on how best to use these resources.
Thank you. Another resource I would mention is both Small Business of Michigan is doing updates every day, Monday through Friday at 3 o'clock. That's kind of the most current information. They're live streaming on Facebook. That's an excellent resource. And of course, the Chamber has quite a bit of information on their kind of COVID response page as well. So lots of, if anything, it's now the challenge is digesting it all and making a decision.
Right.
With that ceiling being lifted, the opportunity for contractors to apply on Friday, what do you think that does to volume, Sarah?
Oh my gosh. I think I heard Friday there's like 23,000 additional, potentially per state, applications that they anticipate over the next week. I mean, the volume of transactions that the SBA and the individual lenders are trying to get through is just completely monumental. So one piece of advice, and I know this wasn't your question, and this is incredibly hard to say, but to be patient, because the SBA, the lenders, they're trying to get through things as quickly as possible. But I know as of this morning, specifically related to the independent contractors, they don't have a ton of additional or any additional guidance as to how to even look at these applications. And as I said earlier, we got notification before the independent contractor application period opened up that at least two financial institutions that we had worked with had paused taking any more applications.
So from a next steps perspective, what can our participants expect, Sarah, from Maynard?
From Maynard, we're certainly reaching out to MSAE. We'll provide any additional information that we have so that you can include it on your resource page as well. There is a lot of information on your page already out there, as well as the Michigan Nonprofit Association. I think both organizations do a good job at putting it out there. We'll continue to have Q&A sessions. You can always email Maynard at maynardcpa.com any questions, and then we're trying to route those to the right person and or make sure that they get clarified over the next Q&A session. And then we're also trying to work with MSAE as well as MNA to make sure that as additional information comes out, it's not just going out through Maynard's network, but also making sure you and all of your members have it as well.
Thank you so much.
Well, thank you. We certainly appreciate the partnership. And again, we know this is such a difficult time. Any questions, Brandy and I, both of our personal information is up there if you want to reach out with any specific questions. But again, Maynard at maynardcpa.com is a good way to go as well. Donna, thank you so much for facilitating and everything today.
Our pleasure. Thank you. Take care, everybody out there. We'll see you on the other side of this.
Thanks. Bye-bye.